All right, guys, how are you, everybody? Welcome to Gatos FX channel with your mentor here, Mr. Gatos, and myself. Last week has been one of the very pretty much good week. I have had an opportunity to sell this Eurjpy as a retracement from the higher time frames. So with this trade, actually, I'm going to teach you how being patient is very important in this business, because my entry was triggered on Thursday, and as you can see here in this Friday's candle, it has been to break all the prices of the candles which had happened since Tuesday, Wednesday, and Thursday. So a day candle has taken out 4 days candle bullish trend consecutively. Why? It's because I was trading in alignment with the trend. So let's figure out how I spotted this opportunity. And of course, I did analysis of this pair on Sunday when the market is closed. I normally like to do analysis when the market is closed because it gives me a good picture of where the price is going. So let's start from the higher time frame in order to see what I was looking at. First of all, remove all the drawing so that your chart could be clean, and you can make independent decision based on what the market is giving you now. So if we look at Euro Yen from the monthly time frame perspective, this market is bullish. Why? Because of the trend. Market is making highs and lows, higher highs and low, higher high, higher 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 low, higher high. When market came to retest at this previous monthly higher low, we never have had any candle which was able to close below and under this point. So this indicating that now are taking over control over the market. Then we could literally realize here above is a monthly high. This is the monthly high. Put it in the light in the middle. All right. And then here down you are having the monthly higher low, which has already been tested, and perhaps you can see when this price came to retest at this monthly lower highs, we have no any candle which has closed under this point, so which indicate that buyers are very serious, and you are having this doji or hammer or p-bar candles. All of them are the signs of reversal, and where they have been happened, we could perhaps see here down we are having a monthly zone. Whenever price approached this area, price was buying. So this is a base, right? And on the top at the monthly highs, you are having a resistance zone. So under these circumstances, now we are going to have our zone of business within monthly highs and monthly lows, isn't it? So we get out of the monthly time frame while we know that the trend with monthly time frame is bullish. So monthly time frame, we are bullish. Then let's go to the weekly time frame and see what's happening in order to have a correlation and add more meaning. Now, when we come to the weekly time frame, we have nothing to do with anything that happened out of the zone of business. Now we are going to deal with price action within the monthly time frame ZOB, right? Then if we say that market is bullish from the monthly time frame, let's see if weekly time frame is supporting this idea. Now, this market is moving by making higher high, higher low. You have the higher high, higher low. You have the higher high. So probably now market is selling to the lows of weekly time frame. So we are going to take a sales of retracement of the weekly time frame, and then we are having another confluence which is saying that now this market is bearish in a short run or in a minor structure, because weekly time frame major structure is bullish, but minor structure is bearish. Why? Because of the presence of bearish engulfing. Remember, this was Sunday, market was closed, so we ever had a weekly bearish engulfing, which was a confluence. Now, okay, price perhaps could give us a certain retracement and continue to sell up to where? Up to this point where we are having a weekly low high. Remember, one of the liquidities that we start is when you have the high, the low, the high. Regardless the trend is bullish, market needs to have a low high in order to continue. And that situation, if you pull it and put it here, it makes sense, right? It makes sense. So we are having a retracement up to this point in order to continue
buy. So weekly time frame, we could perhaps say that weekly time frame, we have major structure being bullish, but we have weekly time frame bearish engulfing, which is a sign for reversal. However, so far, where we anticipate to take our profit in the weekly time frame, we are having a support and resistance zone at this area, because our take profit is perhaps going to be here at the lows of this structure. So you see, it was a resistance zone for quite some times. When resistance zone is broken, it becomes to act as a support. So our exit is within area of interest. Then we can now shift into the daily time frame to add more meaning. Now, when we come to the daily time frame, looking at what's happening now, we have a very beautiful bearish structure. You have lower low, lower high, lower low. So you need your high in order to continue to sell up to where we intend to take our take profit. Then now here comes the issue of where do we enter this trade. Perhaps if you look very clearly, you'll see price was facing a support. There was a very strong support for a number of days. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9. Almost 9 days. Price was able to break that area until last week's Friday's candle was able to break this zone. Therefore, you are getting a daily time frame area of interest at this area. You can mark these bodies here and even up to these bodies here. Right? Always, it is very simple. Break and retest. You see this candle has broken this strong support zone. Then we anticipate now price will come to the artist and continue. So therefore, aggressive entry, we could just enter here, but it will depend with our pips for risking as a stop loss. So if you look at this whole region, the whole zone has about 71 pips. So we cannot risk a trade with 71 pips. We will wait for the price to get in the area of interest and then look for entry signal. Simply bearish engulfing. No bearish engulfing candle, no entry. Right? Now, let's see what's happened. On Monday, price approached it, but never get in the area of interest. Patience will make you avoid unnecessary loss. Because somebody will have just tried to sell here on Monday. Remember, price did not get in the box. Then until Friday now, that's Thursday and Friday, that's when the price triggered in the area of interest. So the only concern was, in order to minimize the risk, because here perhaps we could risk 70 pips, it's huge, it's very huge. Now we'll get into the 1 hour time frame and just simply wait for the bearish engulfing the moment price has just entered the area of interest. That's how simple it is. You gotta have develop that level of patience. Now let's start how that bearish engulfing would have just worked out for this specific pair. Now let's follow the candle. Price has just reached this area. We have had this bearish engulfing formed out of the area of interest, so we don't take that as an issue. Then price again, that will have make us avoid the necessary loss, because if we could have just entered early, price again jumped inside the box. Then we have had this bullish candle. It was never engulfed. It has to be engulfed. It would have been engulfed outside of the box because the opening price was out of the area of interest. Inside, and here now is where we are having a bearish engulfing candle with this candle of Friday. Remember here? So after this bearish engulfing, we just get into the market, and now you can literally minimize your risk, putting your stop loss above these candles here. You can even add at least, you could use even 35 or 34 pips, because your JPY has 1 to 19 pip value. You can see. So after this bearish engulfing, within area of interest, price continue to sell up to the take profit with 230 pips. Only a single day, surpassing all bullish movement which took place from Monday to Thursday. This was only retracement. So it is what it is, guys. See you again with Gatos FX with your mentor here. Bye bye.